Good afternoon, ladies and gentlemen, and welcome to the SMARTSPACE Software PLC Interim Results Investor Presentation. Throughout this recorded presentation, investors will be in listen-only mode. Questions are encouraged and can be submitted at any time via the Q&A tab that's just situated on the right-hand corner of your screen. Please just simply type in your questions and press send. The company may not be in a position to answer every question it receives during the meeting itself. However, the company will review all of the questions that are submitted today and publish responses where it is appropriate to do so. Before we begin, I would like to submit the following poll, and if you could give that your kind attention, I'm sure the company would be most grateful. And I'd now like to hand you over to CEO Frank Beechnor. Good afternoon, sir.
Good afternoon. Good morning, everybody. My name is Frank Beechnor, CEO, and with me in the room today is Christian Shaw, CFO, and we've also got Hadley Ford, who's the MD of Swipedon, who's in the UK from New Zealand, first trip over in 3 years. So welcome to your first investor meet, people. Investor meet, right? So we'll kick off with the presentation.
Hi everybody, just go straight into the financial highlights. So a good period for us, good 6-month period with good growth in revenues across all areas of the business. See here that the recurring revenues were up 49% in the period in comparison to the period last year to 2.37 million. And at the same time, we managed to maintain our margin at around about 90% for the software side of the business, and the hardware side of the business around about 30%. With that, we also maintained our admin costs were steady in comparison to the comparative period, and that allowed us to report a reduced Ebitda loss of £500,000 in comparison to 1.3 million in the previous period. And that also feeds obviously down into the cash burn as well. And you see here that we had a much reduced cash burn in comparison to where we were last year. The hardware side of the business, A&K, also grew, so the revenues in that grew back up to about 36% above where they were last year to 1.3 million. And that really does make that business much more sustainable and an attractive proposition for us. Looking at the cash balance, we had £2.3 million of cash at the end of the period, at the end of July. Our cash is impacted by the working capital requirement, in particular within the A&K business. At any particular point in time, that could go up or down by £100,000 or £200,000. And so there are minimums and maximums in here. And as of the end of September, we're more at the low side on that, where we had £1.9 million of cash in the bank. You see here the revenue charts on the left-hand side. You can see good growth in the recurring revenues, up consistently period on period. That's so that the black blocks at the bottom, and that's really key for us in order to be able to get this business to be a cash flow break-even, cash flow neutral business in the immediate future. We're looking at the end of this year that will be cash flow break-even. And you can see on the right-hand side that the growth in the ARR, and it shows you really where we're going to be in the coming periods, that revenue is going to continue to grow as well going forward.
Great, over to me. And as Frank had said, it's great to be here. It's my first time in the UK for 3 years now since COVID. So and all of you know that now know that we exist, and I'm a real person running a real company down in New Zealand. We've had a very busy 6 months there, obviously with the ARR increases 35% year on year, and pleased to present Ebitda Profit as well. So we're £360,000 for the 6-month period. And we've been cash generative for a couple of years now on that. ARPU has increased significantly, 44% on the year, and we do continue to target high-value multi-location customers. And you can see there we have added the Thermo Fisher contract there. It's been extended to October of 23, so we had another year out of that, and that's been included in the numbers. And likewise, other key accounts such as DHL, Gate Group, and a number of others continue to expand. And with DHL in particular, we've been added as an accredited vendor, and we've grown within the chemicals division, and now we're rolling out into other divisions. And there's obviously quite a lot of scale against that particular account, and it's been going well there. With desks, we've had success, and certainly with one large engineering firm out of Australia. They've got 2,300 desks booked across 16 locations. And in fact, just yesterday, they started a US rollout with a location in California. It's important to note that they actually can run that rollout themselves as well. So we really weren't involved. The IT team there is pushing that out. That's a potential of another 4,000 desks, and then globally, it's quite a large opportunity outside of that. They've got offices throughout the world, South America and whatnot. I've noted about Thermo Fisher there. We've brought the ad buying in-house, which has had a good impact on CAC reduction. So that's reduced materially, as we used to have an outsourced agency which did that, and now all the buying's in-house. So we're getting more leads, they're better quality leads, and we're seeing that flow through as well. That's really just been in the last quarter. And yeah, proud that we've also recently gained ISO and SOC 2 certification, which is important for enterprise accounts.
Space Connect has grown in the period. We've 73 customers now. We did report earlier this year in the various announcements that the first 3 months had been quiet. That sort of has changed since May, and we've seen an uptick in business and new customers coming on board. And that trend has continued right through till last month, and we expect it to continue through the rest of the year. And we've seen a bit of contraction. We had a number of customers on Space Connect who bought us simply because of COVID requirements, social distancing, and track and trace and things like that. They clearly now don't need the product for that anymore, but we've retained them because they're using us to manage meeting rooms and that. What we are doing is acquiring new customers where they tend to be less COVID driven and more around the rebasing of their real estate. Typically businesses shrinking size, same number of employees, but just need a tool to help them manage. And where we seem to get our best customers, where we're focusing our efforts, are basically in professional services, public sector. Professional services, a good example is there was a company in the Channel Islands, took us there first for 100 or so desks. Now they've expanded, and we've seen expansion into Southampton, London, and across their office in Luxembourg. We're also engaged with the NHS in Scotland. We've got some NHS customers in England, but in Scotland we're in 3 of the 13 NHS trusts up there, working through 2 partners, XMA and Softcat, both of whom are partners of ours. So we expect to see that grow over the coming while. Evoco has been great. After a long build up, it finally started to take off in May on the back of a number of initiatives. There was a number of trade shows that had been deferred through last year into this year. Those shows have happened. They brought in a new pricing model. They've introduced a trade-in offer where you can get 20% off an existing panel. And we've also looked at streamlining processes behind the scenes to make it easier for the Evoco partners to onboard new customers. That's manifested itself into good sales numbers from Evoco. It's worth noting with those, the revenue we get from Evoco is 100% margin to us. So if we account for whatever 50,000 euros a month, that's all margin from Evoco. There is no hardware component. This is our net take, both for a license fee for the panel or a percentage of the SaaS revenue. So it's net to us, but we're seeing good growth, and it's reflected in and help with the cash generation within Space Connect over the last while. And I say the last point there is that we have been cash generative in this business over the last 3 months. It will dip in and out a little bit over the next few, but we're expecting to work our way through this cash generation in the not too distant future on a consistent basis, particularly helped by the improved sales of Evoco. A&K, that we've seen that business come back very strongly this year. It obviously suffered through COVID due to offices being closed, and it's trading well. We saw the first quarter went well for us. Then by the time we got to the half year, continued, and that momentum has continued beyond there. We're not planning to do anything expensive with that business other than just make sure we close out in the pipeline that we have. We're very much focused on the UK market, and where the solutions are all around sort of workplace technology, sensors, meeting room panels. And there's definitely been an unlocking in that space. So so that business is in a good state.
So just looking at where we are since the end of the period, so up to 30th of September, we had cash of 1.9 million as of 30th of September. We're at the position where Swipe Done is cash generative on a monthly basis, pretty much every month. Space Connect, as Frank mentioned, there has been cash generative over the past 3 months, and at times earlier in the year it was also cash generative. And I think as we look forward to getting towards the end of this year, we'd expect that business to be cash generative on a consistent basis. A&K is cash flow break even, and therefore that puts us in a position as we get towards the end of this year that the whole business, the whole group, will be on a break even level. The group ARR as of the end of September was just below 5.7 million. Our market expectation for the year is actually 5.7 million. We had a favourable tailwind for us towards the end of September with the pound weakening and the US dollar strengthening. A lot of our revenue is based in foreign currencies, in particular in the US dollars. About 40% of our ARR is based in US dollars, and therefore as the pound weakens and the dollar and the other currencies strengthen, then that does boost our ARR. Obviously, some of that might reverse. There's probably about £300,000 of benefit from that forex effect at the end of the September, and some of that may reverse. But we're still confident that no matter what, we will be able to hit our target number for the end of the financial year.
Great. Yep, and back to Swipe On here. As far as our growth strategy for the year ahead, we are looking to launch into further non-English speaking markets. We've got a slide later on the Korean expansion, which I'll touch on, but we're certainly not going to stop there. And it's been quite an interesting and rewarding exercise. We'll maintain the upsell, and we run a traditional SaaS model with good, better, best plans. So we'll upsell people through that, and all the features we're building, everything we're bringing out is going into the better and the best plans. We've been doing that for quite some time, and we're seeing a good uplift through there. So not only are new customers purchasing higher value plans, of course, existing ones are upgrading through that route as well. And you can see there, 40% of customers represent half of that revenue, and we'll keep maintaining that and building scale against it. We've got land and expand, which is working well, as identified with the other opportunities or the other customers before. And we are continuing with the multi-location rollouts, and we've built a lot of features around that. And in fact, one of the ones in Korea, which I'll speak of later, the customer there has sites in Korea, in the US, so we can service English in the US, Korean in Korea, and they also have Chinese sites, and we're actually working on translation for that. And you can see as well desks, which has proven quite scalable with the revenue as well. So as opposed to selling to one reception or two receptions, the unit economics have scaled quite nicely as we're selling on a per employee basis. So we're adding that layer. We have over the last year, and we will continue to in the year ahead. Yep, here's the Korea one. So we have an excess of 50 trialists, and that has snowballed as we've built in search engine optimization and ads and PR and LinkedIn ads, all of these things. So we certainly had the bulk of the leads and customers sign up in the last month or two. And in fact, 2 of the 5 have been in the last 3 or 4 weeks of the active customers in South Korea. And yeah, the key learnings from this, it certainly wasn't a pure customer play. There is strategic value in being in these other markets. And then, of course, the key learning, let's try this one first and then take what's good about it, replicate it in other markets. So we've had quite a light approach going in there, using contract agency, using a contractor locally to work for us. It's not even on an FTE basis, and that's worked out quite well. We did have assumptions that we would need Android when we were in there, and we were in the process of building it. And then we released that about 6 weeks ago, and that's been quite successful as well. And Android also unlocks opportunities in developing economies. We've essentially doubled our addressable market. No other top tier competitors offer Android. So that allows us to, as I said, we're translating into Chinese now. We've got Spanish underway as well, so we can truly deliver on a global basis. and we're seeing far lower acquisition costs in these markets as well, because there's far less competition. In fact, in South Korea, there's really only one player in a similar vein to us. So really good learnings.
In terms of Space Connect, the main priority is to keep the momentum on Evoco. We, as we come out of the summer period, which historically has also always been a spiky time for Evoco, their main selling season is the last 4 months of this calendar year. So, for us, we've, as Chris has alluded to, we're sort of on track to hit our numbers for the full year, and you could argue that maybe the forecasts are too low, but equally we want to see that there's consistent growth over a period of time, especially through sort of traditionally busy months from September through to December, before we would do anything about adjusting the sales upwards. The Evoco's ambition and aspirations for NASO is still as high as ever. As you know, we rebased our numbers late last year, so we've taken down to a low level. We're actually achieving above that right now consistently. But the real question is how far more we can actually push that. It's quite, once we get to a point where Evoco is generating somewhere in the region of 70,000 euros a month of sales, it gets us through to consistent cash generation and profitability in the Space Connect business. And we've, we're probably about 20,000 off that right now, but the trend is in the right direction. We've obviously got the key relationships here in the UK with Softcat, and XMA and a number of others. We've opened up new partnerships in the Far East. We announced a relationship with Yealink, I think, in one of the earlier announcements we put out, and they in turn have introduced us to their distributor in Singapore, a company called Lantone, and we're engaged with the first customers there. We're not planning to sort of go broad on expansion and opening up of new customers. Crestron is a good example right now, where they've obviously got a great network, but they've still got big problems with supply. They're citing sort of something like 12 to 14 months for delivery of panels, which doesn't suit us because we can't recognize our software if the panels aren't, if the customer hasn't got the panels in place. So it's really, I suppose, consolidating what we have, encouraging them to sell through, working closely with the partners. Is probably the main focus for the Space Connect business for the next half. In terms of markets and competitors, I mean, the UK is tightening, obviously, with the general uncertainty that's here, but we're still got great momentum here. I mean, we're having a good month so far, for example, in Swipe Down, and we're having consistently good months with Space Connect. But equally, then we're cautious about the outlook for the UK. The saving grace, obviously, is the fact we're not all in the UK, and the geographical spread of the Swipe Down business has been part of our robustness and growth, because we've obviously got our 5 core markets, but we haven't based entry into new markets as a launch pad for sort of increasing our numbers. We want those to mature and grow, so we might start to put numbers against those next year. There's 4 or 5 key consolidators in the market. Envoy had an investment from Brookfield, so they're one. You've got Condeco. They were bought by Thoma Bravo and JMI last year. They in turn also bought iOffice, and just last week they announced that they had actually consolidated all of those under one brand. They haven't integrated the products; they're just there under one brand. The main thing for us really is there are 4 or 5 major players in the market focused on this market because they see real growth, and there's no doubt at the required time they will be interested in us. Our job is to make sure that we have enough value hooks that they can lock onto. Now, obviously, good SaaS revenue and good financial numbers are really important to us achieving value for this business. But then the strategic aspect of what we're doing, being very active in the Far East, opening up as many markets as we can, because a lot of the competitors we're against, they're very much focused on English-speaking markets with a heavy emphasis on the US and the UK in particular. If we can, I suppose, offer something different, then we're going to have appeal. The valuations that are being paid out there are still generous compared to or very generous compared to our current multiple based on the share price. but equally they're lower than what was being paid about a year ago, but still significantly higher than what we're trading at today. So still a very active space, growing with consolidation, with a number of key players with deep pockets emerging, and positioning ourselves to make sure that they're aware of us and they're aware what value we have is a key part of our job over the coming sort of 12 to 24 months. As you've heard through the presentation, really good growth and good momentum across all the business, and we obviously want to continue that through the rest of the year. Obviously, getting into two other markets in the Far East is really important for us. We've invested heavily in development, and we've got a single development team now based out of New Zealand under the CTO, Matt Cooney. He's got about 25 developers there, and then we've got 16 up in Vietnam who are third party, but they're working exclusively for us. And a big push in our business really is a consolidation of our platform. So we end up with a single platform that takes the best of Space Connect and Swiped On together in one platform that we can maintain sitting in one environment. And the aim is to release that early in the next financial year. We seem to be okay on salary levels. So, you know, we had a period last year when the borders were closed in New Zealand where we had some turnover of dev staff. We've countered that by making sure we continue to hire in New Zealand, but also then to give us a burstable resource up in Vietnam, which touch wood is working really well for us. And, you know, so we haven't seen any major staff churn this year. And in terms of salary levels, we think the levels that we're at now are competitive, and we're not looking at major increases in the coming year. So we're not under huge inflation pressures in that front. So all in all, really, it's all about getting us to being cash flow positive for next financial year, and with all of the other KPIs to follow to maximise the value of the business. So thank you very much for your time this afternoon, and we'll switch across in a second to some questions.
Frank, Christian, Hallie, that's great. And thank you very much indeed for your presentation this afternoon. Ladies and gentlemen, please do continue to submit your questions just by using the Q&A tab that's situated on the top right-hand corner of your screen. But just while the team take a few moments to review those questions that were submitted already, I would like to remind you that a recording of this presentation, along with a copy of the slides and the published Q&A, can be accessed via your investor dashboard. Guys, as you can see, we have received a number of questions throughout today's presentation. So thank you to all of those on the call for taking the time to submit their questions. And if I could just hand back to you to run through the Q&A tab to respond to those questions where it's appropriate to do so, and then I'll pick up from you at the end. Thank you.
Okay, there's two questions there, both relating to the same thing. So I'll maybe hand it to Hadley to answer those. So it's what was Swiped On churn, and what's the trend on churn, and then why some customers being lost? Why, if so, do we know why?
Okay. I'll start with why they've been churning. There was a bit of a sugar rush with COVID and people after point solutions, whether it was contact tracing or even knowing where employees were and all of these things. Some of those practices have stopped and those customers have left. So by and large, that has been the main contributor to our churn. And as far as the numbers go, we've certainly turned a corner on that, and it's improved over the last quarter. Do you have the actual figures there, Chris? I think we're up at about 14% and down around 12 now. Is it?
Yeah, well, I think it peaked up just high 14s, and we're down towards between 12 and 13 at the moment. On an annualized basis. So it takes time for those churns, which happened 6, 7, 8 months ago, to drop out of that number because it's calculated annualized. If you look at it more of a monthly basis, we're actually even lower than the 12 to 13.
Absolutely. And it's worth noting a lot of those were single location customers, and also lower value as well against that. So it's in a weird way, it's had a positive effect on our ARPU as well.
Good. We've got a question here on set out location and number of existing employees and any proposed changes to number of locations. So maybe Chris.
Yeah. So we've got about 70 people employed directly by the business, and we've got about 15 or 16 contractors, development contractors. Those development contractors are based in Vietnam, so we have a development team over there who are very versatile. We can take them on as and when we need them, and then we can reduce that as and when we need to as well. We have about 40 employees based in New Zealand, pretty much entirely working for Swipe Done now. And then over here in the UK, we have 25 employees here, split between A&K. There's about 12 in A&K, Space Connects, 6 or 7 in Space Connect, and then a small group PLC, 3 or 4 people in that business.
Great. The next one here is how much of your business is direct versus indirect through partners? Space Connect is 100% indirect, so that only sells through partner models. It goes after a slightly higher ARR than we have in Swipe Done. In Swipe Done, it's probably we've got probably over 100 partners around the world, but actually in revenue terms, it represents a small percentage, probably no more than 2 or 3%.
Sure.
But it's a different proposition. And we expect that to change as we move into the next generation platform, because we'll have more to offer partners in terms of implementation, consultancy, and obviously the value of the software deal. And we plan to continue with this strategy for the foreseeable future. We don't have a big headcount in Space Connect, and we can service the partners we have with the headcount that we have. It's really a question of working with strategic partners like Evoco, and if we can actually find some more of those that where we can maintain the relationship without necessarily having to have a whole team of people sitting around, that it works really well. The direct to end user model works really well in Swipe Done, and the big focus there will be to encourage lower value customers to transact on almost an e-commerce basis. They sign up with their credit card in and go. And then the more complicated sales, or where there's the larger value or larger footprint, then we would engage with those on through one of the sales team. Okay, there's one here for Hadley. Could you discuss the competitive environment for Swipe Done from a global perspective?
Okay, this is a good one. As far as the US goes, there's still a lot of ground to be won. I believe we're well priced there. Envoy, which is the 1.4 billion valuation competitor there, they do have a freemium model, but to get any value out of it, I believe even to take a photograph is about $299 US, whereas our enterprise plan comes in at about half that. So that's fine in the competitive landscape in the States. In Australasia, that's underpinned a lot of our growth over the last couple of years and been very strong, both in Australia and New Zealand. And the UK has been a bit more competitive. There is one player there that's a bit cheaper, signing out, and I believe just the trading conditions here. But look, we're in 73, 74 countries. We're in 5 main ones, and as Frank said, we've got the resilience to be able to double down in areas that are growing. Yeah.
And there's 2 follow-ons to that then. One was Thermo Fisher and asking about, has that led to larger pipeline opportunities that they could see us executing on, I suppose they're going after larger customers?
On a broader sense, yes, within Thermo Fisher itself, it's our intent, but there's nothing in there at this stage. But we do have other accounts that are of significant value that in the pipeline as well. Certainly hasn't stopped at the ones that we presented today. I'd hope to be here in 3-6 months and talk about other accounts such as this.
Yeah, and as you'd imagine, with those larger accounts, the sales cycle is a bit longer and a bit more protracted than that. But all of the things we put in place now around enterprise level functionality, in-country hosting, which is really important for those larger customers, ISO compliance. So all of those things. So we've got the building blocks now that we can play in that space. And when we've lost bigger deals in the past, it's generally down to things like that, isn't it? Yeah. And then the last bit of that question was, could you please discuss the synergies of having Space Connect in-house, and how that impacts your long-term ambitions for Swipe Done ARPU? Not sure. Okay, we might have to come back on that one and just to. Okay.
Or is that the integrated product?
If we talk about it in the context of the integrated product, so sort of bring it all back in under one team.
So at present, Swipe Done Desks is a standalone product from Swipe Done. We've had no problem selling it to new customers coming in, but some of our existing customers that are used to Swipe Done and I guess the ease of use of it have wanted it fully integrated. We are in the process of building that out, and we see great opportunity over the next, well, certainly into the next financial year with that on the scalability of the revenue and also the offering itself. We're not going to stop at desks. It is a modular platform, so you'll be able to book car parks, lockers, bike stations, meeting rooms, all of this. And we've canvassed our customer base, and we see a lot of interest in a fully unified product. Yeah.
Good. Next one is, are the price increases you put through on Swipe Down now fully in the numbers to September, or is there more benefit to come? Chris?
No, there's definitely still more benefit to come. Some of the larger enterprise customers had discounts applied, so we spread the price increase over a period of time, so that will take time for that to completely come through. The majority of it will come through once the customers reach their next renewal, which is coming up over the next year, but there may be a little bit more which would even come through in the year after. Yeah, there's definitely still some to come.
Okay. And there's another one for you, Hadley, there on sales distribution for Swipe Down. Are there partners that could take you into markets like China and beyond? I suppose some of those AWS discussions.
Yeah. Actually, Korea has unlocked a number of interesting strategic discussions from players there in tangential fields that don't have visitor management, looking to bring something in. So and access control or other areas. So yes, there are those discussions underway, and we're actually becoming accredited for Amazon's partner portal as well, which will mean we'll get Amazon salespeople to be able to assist and market there through partners. And as Frank was saying, as our product expands and the offering does, we're far more attractive through resellers and partners.
Yeah, maybe take one more. Chris, given Evoca revenues are pretty much all margin, what should the natural gross margin be versus the 70% currently?
From the software side of the business, we're about 90% margin. And so if you take out that hardware element, then we would be around about the 90%. As you mentioned there, the Evoca side is pretty much 100% margin for us. And so as that grows, that might even expand above 90% to I guess 93, 94, but in that region.
Okay, and there's just one final one that we'll jump in there. Is how has the UK cost of living crisis affected your customer base? In the main, we tend to be in markets where we're not dependent on retail and hospitality, which I think are definitely being hit worse at the moment. We're in financial services, and I suppose we become part of their solution and their effort to reduce costs. If you are going to take down your premises cost by a significant amount, having a bit of software to manage it and an app that employees can use to book not just desks and meeting rooms, but car parking spaces and all the other things, then we become part of the solution. Obviously, the sales cycle is a bit longer, but on the other hand, the customers end up being a lot stickier rather than a single site operation. As you've seen through COVID, when the regulatory pressure removes, they sort of churn. On the other hand, someone who's invested heavily deploying the product, they're less likely to churn unless we let them down with the technology. Okay, so we'll answer the other questions online. There was a few others, but I think that brings us to a conclusion today. And thank you, thanks Chris and Hadley, and thank you very much for your time today, everybody.
Frank, Christian, Hadley, that's great. And thank you very much indeed for addressing all of those questions that came in from investors this afternoon. And of course, if there are any further questions that do come through, we'll make these available to you immediately after the presentation has ended for you to review, and then add any additional responses where it's appropriate to do so. Frank, perhaps before redirecting those on the call to provide you with their feedback, which I know is particularly important to yourself and the company, if I could please just ask you for a few closing comments to wrap things up, and then I'll redirect those on the call for feedback.
Yeah, I suppose that it probably comes back to some of the points actually that came out in some of the other questions about how we're performing as a business, and we appreciate it hasn't been an easy ride, and we're I suppose trying to grow the business in what is difficult times, but hopefully today's numbers demonstrate that we've got good momentum, and we've got a plan that sees us going through to profitability, and our ultimate aim as a management team is realizing shareholder value. And Hadley, as a 5% holder, is very much got our feet to the fire on that one. So, and we're all joined at the hip to make sure it happens, which ultimately will be to the benefit of all shareholders. So again, thanks very much for your support, and we look forward to speaking to you again in due course.
Frank, that's great. And Christian and Hadley as well, thank you once again for taking the time to update investors today. Could I please ask investors not to close this session, as you'll now be automatically redirected for the opportunity to provide your feedback in order that the management team can better understand your views and expectations. This will only take a few moments to complete, and I'm sure will be greatly valued by the company. On behalf of the management team of SmartSpace Software PLC, we would like to thank you for attending today's presentation. That now concludes today's session, so good afternoon to you all.